Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Let's talk about the equity markets this morning. A little bit of a Black Monday going on this morning. Dow was down about 1,000 points, S&P close to 100 points, and the NASDAQ down 400 points. Can it get any worse? Probably not. Let's talk about the equity markets in general here. Basically coming in today, the markets were already in correction. Last Thursday and Friday, we saw hard hits to the NASDAQ, S&P, and Dow. The Dow was already trailing underneath its 200-day moving average. S&P was still above it, below its 50-day. However, last week we saw the NASDAQ, S&P, Dow dive underneath its 200-day moving average, pretty much telling us that the correction is in. Now, on the positive side is a lot of panic going on. We saw this morning with the Dow being 1,000 points, kind of a capitulation liquidation, and that's kind of a positive thing. And also, if we look at some of our contrarian indicators, last Friday the put-to-call ratio closed on the CBOE equity put-to-call ratio closed at 1.69. For a closing basis, that's pretty much a record going back 20 years. Some intraday levels at times were higher. However, that tells you how much fear is going on, and that pretty much, tells you the markets are oversold and probably due for a bounce. Similarly, if we look at the VIX over the 3-month VIX, they inverted last Friday, even higher this morning. Again, that tells you the amount of fear going on, and usually we do see bounces at those levels. If we look at the sentiment surveys, extremely negative coming into this week. Everyone was very bearish, whether it be the American Association of Individual Investors or Investors Intelligence polls. The bullishness has basically been dropping off the charts. So what does this mean for investors, or how do you play this market? Well, hopefully you had raised some cash during this time, and doesn't mean the bottom is definitely in, because as I've said many times before, calling a top or calling a bottom is a little bit of a fool's game. However, you do kind of want to hedge your probabilities of what's going on. Now this morning, the Dow's being down 1,000 points. Now it's down about 300 points, much improved. The NASDAQ was down about 400, now only down 100 points. So that's pretty bad. But pretty much right around these levels, markets do tend to bottom. Now, it doesn't mean they go straight back up. They may bounce around this bottom. We may even get a lower bottom tomorrow morning. We don't know. If you look at history, 1987, Black Monday, the market actually bottomed the following day on Tuesday. If we look at August in 2011, the market got hit, pretty much bottomed on a Monday. So, and the same situation is we get extreme fear, everything's oversold. At the brokerage we use, you couldn't even borrow stock to go short. So many people were shorting stock, and usually the crowd's wrong, the crowd's panicking. A lot of people are liquidating this morning, and that's probably might be pretty good close to the bottom. So you want to take a look at your stocks, your fundamentally sound stocks, see where they're at, see if they're nearing buy points. Just kind of create watch lists, set it up. You want to look at stocks that are still showing higher relative strength than others. Those might be your next buy candidates. So again, no reason to rush in. But take a look at it. We're probably oversold. Now, as long as we bounce from an oversold level, that's really what we need to see. Now, if we can't bounce from these oversold levels, well, then everything I just said is off. We might even go lower, but I'm willing to bet the probabilities are that somewhere in the next day or two, or even today, the bottom for this quick and swift correction may be in. So that, as always, that price and volume be your guide. Have a great trading week. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago.